right, let's jump into it. Where are we at? 10:39 on Friday. So end of the week, grand final parade, grand final eve today, 26th of September. So I've got to change things up a little bit. So I've been doing the news and the data at the start, which kind of makes sense in that if you're more of a fundamental driven sort of trader, obviously sort of you need to know what's coming up and this kind of stuff. But I had a thought, look, reapproach this a little bit, go back to what I was doing a while ago, whereas I was basically actually taking the news into account at the end of it all. And look, we'll see how this kind of goes with it all. The kind in short, the reason being is that it's kind of like, well, these are the levels that the market's going to respect. If the price action is according. And that's basically, as we can tell, these are where the sellers were, these are where the buyers have been, yada, yada, all this sort of stuff. Now, obviously, when you get large bits of data, the market doesn't really sort of care, particularly if it's close to, the market doesn't care about those levels so much. So it's got the ability to blow through them, you know what I mean, and they may not hold and all this kind of sort of stuff. But the idea is still the same, that these are the levels where the buyers and the sellers have been. If we have a large bit of data coming up, so I'm talking CPI, NFP, FOMC, these kind of things are where it's really going to sort of go, well, it doesn't, like, they're definitely not going to care about those levels there. But just as a quick example, we had GDP and a bunch of other bits of data in that last night. It was sort of consolidating around near these highs here and then just bang, popped through. So, you know what I mean? It was a level that it was respecting, as you can tell, a couple of times here prior to that little bit of data, and then it sort of shot through it. Now, that's not so much what I'm saying in the sense of market won't respect the levels and all this kind of stuff, because obviously it was respecting that level there. I'm saying that sort of like it could be sort of, hovering around here, or in this case, it could have been back down over here, whatever. It doesn't mean that level's going to hold once that data comes out, if the data is a big shock. So if it's a lot higher, certain sort of like higher, depending on what you're looking at, but like sort of stronger, weaker, if it's a bit away from what the market expectations are, then it's got the ability to just look, it's just going to go, and then you can sort of look at the things. But the levels after those levels are potentially where you will see it move a little bit. So let's just drag this up over here. We can see that. Actually, we don't need that. I mean, what do you see? It's gone 100%. That's great. Anyway, look, point is that just going to sort of go back to a bit more of the technical analysis at the start. Look at the data afterwards, and then we can sort of feed back into it and sort of go through bits and pieces. Um, what I actually sort of, after that long spiel, what I will do actually now is actually go back and forth on that, just with the data that we had overnight, so we can explain sort of what has happened, but upcoming data then we'll sort of jump into at the end. So let's pop back on that. So this is the data that we had overnight. So refresh this one up a little bit. Look, it's been a bit of a week this week in that, so obviously we've seen everything sort of pumping all over the place in that. Aussie, obviously this is overnight data, this is just the other day, but we came in persistently stronger with the CPI. I really thought this was going to come back down to around low twos and that, but again, look, as I've always sort of said, particularly with Aussie, it doesn't care. If you get US dollar buying, it doesn't matter what your sort of data, local data is. We got the rate decision next week from the RBA. It's looking pretty much like a hold with two back-to-back strong, well, back-to-back 3% ballpark figures of CPI. So I would say there's quite a high chance that they're going to hold next week. And obviously, Aussie is still sold off. So it goes to show of that sort of point. But the big one I want to kind of talk about is, as I said overnight, was this block of data here. And this is what is really sort of what the market's been looking for. There's a couple of big things here. We got GDP expected to come in flat. It's coming in stronger. And why that's important at the moment is because jobs have been so low. And this is what Powell was saying the other week, that he was like, look, jobs are low, but the data's not too bad. So if you're still increasing or above expectations of what your GDP is, 3.8%, if you have a look at sort of where it's been, it hasn't been at 3.8% for quite a while. We're talking going back to December 23. So, that's the highest print that it's put out, and that was obviously a bit of an outlier just here as well. But, this is the second highest since March 22. That's strong data. That's a strong GDP print, and it's above expectations. Again, the market was pricing, thinking it's coming in at 3.3. It's not the only thing they were pricing for, but that's what they were pricing for. Came in at 3.8. That's strong data on low amounts of job creation. Now you got to sort of play this out. What happens if they then add more jobs into the economy? You know, they're not necessarily about to see massive print on NFP, but this is the consideration because if you're doing this well on less, like as in this well as in higher GDP, on less employed people, on less, so call it your skeleton staff, skeleton crew, skeleton staff. Well, what happens when you add more people in? Well, effectively, you know, you're not going to add them into do nothing. So it's going to add to GDP. So it's going to add and make that sort of that local data even stronger. So that's a very big tick for US dollar there. Unemployment claims down again. So we saw this sort of spike up 2 weeks ago. It's 263. This is the weekly print. It came out 263. Everyone's like, whoa, here we go, jobs, jobs, jobs. And you know, because jobs has been to the forefront, now we've seen it reduce down and reduce down again. And look at this. Where was the last time? So we're going back to July. So it's the lowest that we've had in what, 2, 3 months or so. That's another big tick for the US dollar there. Durable good orders. Shocking last month. Expected to be better than it was, but you know, not as good. Came in pumping. The orders are up. The output is good. The unemployment is low. Excuse me. Trade balance and that looking to sort of move back into a sort of positive direction. You know, this is some really strong data altogether. And that's all I wanted to sort of cover with that. I suppose we had a bunch of speakers and that sort of through the night as well. That's fine. We can get to that. It's actually hard to, hard to do the news at the end. But let's get back to it. Look at the reaction. This is the move. This is the candle that we had as all that data came out. And as you can see, it respected the zone. This is where we had the sort of little target area. And again, these levels, these little sort of, where I sort of put out these targets are based on price, not time. So it could have been here, it could have been, well, it wasn't back there, you know, whichever, whatever. But the idea, it just so happened to come in there in the right timing as well, which makes it look like, you know, hey, superstar. But the point is, that strong data, the market's gone, okay, bang, let's push it up in here. And what we're seeing is a continuation of this move where it took out the lows, strong rejection, back up. It had a little bit of a falter midweek. As you can see, I've got this little sort of fib retracement of the move through the week. 38% retracement of the low. So take the low, take your first push up here, and we started to come back kind of into this zone over here. A little bit of a wonky looking inverted head and shoulders, if you want to call it that. But as you can see, 38% right on the dime, and bang, push back up. And this is what I'm saying, sort of like, you know, he disregarded this level. It's not like this was really a level, but, you know, it's just a tiny little wick there. But came up here and came in, sellers, profit takers, whatever, they sort of held it at this zone here. Now, the question is, do we get consolidation through here and a pop up through here, or do we get this sell back down as we have so many times before? Let's chuck it on a high time frame. You can see the importance of this zone here. We've had it marked out for quite a while and that, but this is that range that we were in for, I don't know, a week or something. Where we at here? So from the 6th of August, kind of through till, you know, the, you know, 6th of September. So about a month or so we were in this kind of little range here, popped out the bottom, and it's come back up here and it's stopped. It's a little bit overbought on the 4 hour. How's the daily looking? Daily's got a little bit of room to move, but this is what we were saying. So if you look at the sort of, you know, the weekly wrap, this is where I was saying that it needed to get above these, where was it? The Friday high. So these are the Friday highs just here. That little zone there is where we had that alert. We tested it on, was it Monday? Yeah, Monday, sold back down, bang, through up over here. Sellers are coming in. And this is a bit clearer on the daily. You can see why the market held this where it did. Now we got PCE tonight, so that's going to be the sort of driver to sort of say, are we going up or are we going to sort of come back down? So generally after these big moves, probably expect really at best a little bit of sort of just consolidation. If we do see consolidation up around this zone over here and we see PCE going up higher, that's when we're going to move up to the next level. That's going to be the secret sauce, so to speak, of this little move to go up to 99.34. Now, I've got that zone marked out over here. We chopped through it, of course, but that is still the target that I'd probably be saying. I think, I think moving up to these levels over 100, that's probably a little bit of a stretch too far just at this point. But I would say next target is 99.35 zone over here, because PCE is supposedly the Fed preferred, the Fed, sorry, I sound like I can't speak English. It's the Fed's preferred source of inflation data. So we have CPI, which is the Consumer Price Index, which we've seen slightly pushing up. And now we've got sort of PCE, which are very similar to sort of CPI as well. But supposedly this is the preferred method, so to speak. CPI gets all the headlines and everything like that, but we'll see how we go with PCE. Because the question, and this is the thing, the dynamic that has shifted since FOMC, that we are going to sort of start to have to sort of price in inflation risks and not solely look at jobs. I mean, we just saw jobs 2 seconds ago. Jobs are 218, and now this is a weekly unemployment. So NFP's next week, that's going to be the big clincher. If that comes in above expectations, stronger the better. That's going to add to the fuel, to the burn, to the fire of US dollar moving up. So I think very much it's in a rebalancing mode at the moment. It's obviously got work to do. It's been a very long sort of arduous sort of trade through these areas here, but it does look like we could potentially be seeing some further moves up to the top side here. The targets, as you can see, are these ones moving through here. I think, look, really, if you could get up above 102, well, then you could see some sort of much larger kind of pushes potentially. But let's take out these lower levels before we worry about those higher levels. Now, where are we at here? So, as I said, look, in short term, I would say probably some consolidation, possibly even some profit taking from this area. This is a sell area. We've seen the sellers move in time and time again. We got large bits of data to come up tonight. Generally, before larger bits of data, you see fairly slow market movements. And I think sort of after such a strong push up into a resistance zone, you could expect a little bit of profit taking. If they buy it back up and they consolidate around here, if we get a strong PCE print above expectations, we break through. If we get a lower one, possibly just a dribble back down over to here. But I think certainly at the moment, you need to respect the fact that, the job numbers aren't looking as bad as we've been told for ages. Inflation is actually looking like it could be a little bit stronger. And that's the thing, that you've got to know the response from the Fed are polar opposites. If inflation's higher, and that's the main thing you're tackling, well, you're going to hold rates. If jobs is the main factor, and that's the thing you're tackling, you're going to lower rates. And that's the thing that everybody's sort of like harping on about. And, we saw, last thing I'll sort of say on this before we just sort of move along as well, is remember DXY, which chart did I have it on? Maybe this larger one here. This is where we saw the 50 base point cut last time, and this is on the daily. So what do we have? 1, 2, 3, 4, 5, 6, 7 sessions, and it started to move. Where was the cut here? 1, 2, 3, 4, 5, 6, 7. Well, it's come in a little bit earlier and started to move now here as well. But as you can see, sort of like, this is what we saw last time with that 50 base point cut. The market was so freaked out. Here we got the market out. They're going to cut soon. They're going to cut soon. They're going to cut soon. They cut, and you actually see the market moving in the opposite direction. So it's not like it's some price action we haven't seen before. All right, moving on. Got Aussie. Aussie is obviously something that has been a nightmare to trade. But what we are seeing here is a little bit of a sort of pushback down. Now we do a little sort of analysis here. US dollar is moving up, so that's weighing on it. Yuan is moving up, that's weighing on it. I'll get to the yuan as well because that's one that I've been sort of trading, well, sort of touting for a while, the 715 level. RBA looking to hold, so that's actually something that could actually be a little bit more beneficial for it. And then we've got sort of the risk appetite in that. So the markets, I'm just having a quick look at where US markets are. Look, I'm going to give that a neutral because it is still technically going up, but at the moment, whoops, it is still technically going up. Get rid of that line actually. This line, yeah, you. And as it's still going up, let's just put these out here so I can see a little bit more. As it's still sort of technically sort of moving in an upward direction, and that it's not like risk appetite's just dropped off a cliff. If we do see that start to sort of roll over and come down, well, that's going to be pushing Aussie down there as well. But at the moment, it's really still kind of. I mean, look, it's pulled back 100 points. I'm talking about the S&P here, 500 points of 100 points off its highs. So it is sort of faltering a little bit, but it's still holding in there. So that's just something to keep an eye on here. But if we get back onto the actual sort of Aussie trade here, get onto lower time frames, we can see a couple of things. We can unpack a couple of things. So this is where we got that break through end of last week. So it's sort of retest here and then break down here. Very persistent, very persistent. Buy the dip has been the play for Aussie for the whole year. As you can see, it retested the underside of this like sort of rising support 3 times, and then look, it was really 80 was the level for it to break through, and that's what we got last night. It kind of really sort of started to grind back up into that sort of underside of sort of 66, but obviously, as you can see, it doesn't matter if the RBA is going to hold next week. That's great. It probably sort of mutes the size of the downside, but it doesn't prevent it. And I think that's an important sort of different thing to sort of point out with Aussie is that sort of like it can slow down the move. Like if we were going to sort of see a cut next week, if CPI was low, plus you see US dollar move, well, Aussie would probably be down, probably sub 65 at this point. But when you weigh in the factors, and hence these little arrows up over here, you've got US dollar strength pushes it down, but the RBA is looking to probably hold, so it pulls it back up here a little bit. And as you can see with this one here, I mean, this is a very crude sort of drawing of it all, but that's the point. That's where you get it. So if Aussie was cutting as well, if the RBA was cutting as well, you get a double move down to the bottom side there. But they're most likely looking to hold next week, or at least the market's going to be pricing for that. Excuse me. So with that, it's obviously sort of slowed it there a little bit, which is fine. I mean, I still think we probably have a little bit more downside, but couldn't expect some consolidation through this zone. So where we're at here at the moment, so this is its last drive up from that sort of 420. We just clipped into the 61.8, 61% retracement. It's also into those 20 zones. Now, I always sort of mark these out because really 90s, 60s, and 20s seem to be the levels that Aussie seems to sort of gravitate around. When it's sort of moving up and down, you can probably get a pretty decent trade out of both of them. I think we probably will still see a little bit of a dribble down, possibly to test these levels under here. It was a little bit of a sort of bear flag from the highs up here, and it does work out pretty well with a little back test moving to the bottom side here. So I wouldn't be surprised if we do get a little bit more of a dribble down. Doesn't mean it's going to go in a straight line. We could see a little bit of a push up and then a push back down, possibly up into 60 and then sort of a drive down under there. We'll see what happens with PCE, but completion of that bear flag into a zone 90s, I would say that'd be definitely your profit taking time for the downside moves, and you'd probably see an attempt to buy up from the market there as well. If you put it on the daily, that's kind of like that sort of channel support there. Yeah, we sort of cut underneath it a little bit here, but I don't think that's enough to sort of say, hey, look, this line is obsolete. I mean, we've got some pretty decent sort of touches to sort of like confirm and matches up with the channel along the top side over here to sort of say, hey, look, you know what? This is an area that the buyers have been watching for quite a while. They let it down underneath here and really thought we were going to get that drop down over here, but I can't remember what was that. Some sort of US data, I think, like that, sort of springboarded it back into life. Anyway, the point is, it's still rolling over here. It's pretty oversold on the daily. 4 hours still has a little bit to go, hence probably a little spike down. If we see a drop, okay, if the price action comes a dribble, fast move down, touch this area, and then put in a big bottom wick, that'll be a bit of a bottom. That'll show that you've got an area where you've got a completion of a technical move. You've got an area where we expect the buyers to be sort of lurking, and you see a fast move back into that position. So a little dribble, shoot down into, say, maybe around 65, 64, 90s, I would see, and then a quick move back up. that would be the time to be either booking your profits on your shorts or possibly looking for a deeper, a bigger kind of bounce with the Aussie there. But as I said, I think really PCE tonight is going to be the sort of driver and going to determine sort of what happens there. And as you can see, market's boarded off this line a bunch of times. If it breaks and holds, which would go in line with the US dollar, sort of probably sort of having some continued buying if we get stronger inflation data, and then obviously NFP next week is going to be the bigger kind of one of the two, definitely there. That's if you break that line there, that's where you start to go, okay, we're going to see some deeper corrections. But we've been here time and time before with Aussie, and the buyers have been loving buying the dip. So you got to kind of think that maybe they're just going to, at least they're at minimum going to try it again. But yeah, a little dribble along here, a little shoot down and then push back up. That would be an indication this is a bottom. Apart from that, otherwise maybe just a little bit of a dribble around the lows down over here. But I wouldn't be surprised if we get a little bit of a push lower. Not that I've sort of been covering it. Silver, absolute boomer. Where's the one here? This is on the high time frames here, completed the 216 retracement of April's disastrous little week there. This was like one of the greatest trades I did with that short through this move here. Tried to go short again a couple of times over here, got chopped up, and I haven't traded it since, actually. I haven't traded since it went above 33.70. So, yeah, I've been sort of, okay, it's got to pull back, it's got to pull back, it's got to pull back. This thing has just been exploding. So, absolute insanity with that move with silver. Very, very strong for them there. All right, onto gold. So, gold, I mean, look, it starts to come down and then buys back up, tries to come down, buys back up. So we did see a little bit of a sort of pushback down yesterday on that stronger US data. So you can see that that correlation is trying to hold. But as we have seen time and time again with this market as well, particularly, that it is very much just sort of buy the dip sort of status and just wait a day or two and you're pretty much in profit. So, this is on the 4 hour here. You can see this is a pretty decent little line that the market's been holding here at 32.33. This is what you need to see a close underneath. So let's see, close under here, close under 28. We'll say close under 28. Don't worry about these whatevers. Close under 28, further pulling. At the moment, it looks like it wants to sort of attempt to possibly sort of push back up here a little bit. We can actually make a little zone in here where you can see that obviously the buys were here, came into it, smacked down and sold. We actually had a little test into it sort of early hours of the morning with all those speakers. Bowman was out there sort of pumping her tune and that about sort of all the kind of same garbage kind of thing. Like, I'm like, maybe it is her sort of belief. But you can't help but sort of think some of these people just have a plain sort of rhetoric. Because, like, even in the face of all this positive data we saw last night, hold on, let me pull this up. One sec. Even in the face of all that data last night, does this come here? Oh, there we go. Boom. This is what she comes out sort of saying in Sept, 12:13 or something. You know what I mean? We had all this sort of very positive data. And do you sense the sort of theme here? So tariffs will have a one-time impact, price impact, and shit. That's sort of saying that, hey, look, inflation isn't going to be an issue. So we know US dollar is going to move up on inflation fears and not jobs. So that's obviously saying, hey, look, it's only going to happen once. That's the kind of thing here. We have space to bring down policy closer to neutral. That's sort of saying, hey, look, we could still take things lower. We're in sight of the 2% inflation range. Don't worry about inflation. We're there. We've pretty much got it done, even though, it's moving in the other direction. You know what I mean? We've seen inflation prices move up. There's no comment sort of saying, hey, look, we're close, but we've got to make sure that it doesn't sort of get out of hand. It is appropriate to shift jobs instead of inflation. Obviously, hey, look, this is just after we had all that sort of US data come out. We had unemployment numbers drop to the lowest they've been in a couple of months, and it's like, hey, look, come on, let's still look at the jobs. more fragility in the labor market than expected, appropriate to shift to jobs over inflation. Well, of course, again, the same sort of thing. Don't forget jobs, don't forget jobs. And we know what the reaction with the market is in that kind of regard. They're sort of like, hey, look, well, the Fed, sorry, if the Fed wants to do something about that, they're going to be sort of lowering rates. Let's keep our mind on that. So, you know what I mean? Even though you had all this super strong US data, the theme here is inflation won't be an issue. Let's not forget about jobs. Inflation's pretty much done. Labor market's very fragile. It's all still with that kind of idea. And this is what I mean. It's sort of like they've got an agenda that they're trying to push. You ignore the fact that you just had all this strong data. You don't mention any of that. It's all just about, hey, look, this is the rhetoric that I'm sort of pushing. And obviously then that, the market freaks out and weighs up and yada yada, all this kind of stuff. We saw a while ago US dollar actually get hammered on some of her comments. So we'll see how it goes. Anyway, point is, back to gold, US dollar obviously sort of looks like it wants to be moving up a little bit. We saw the impact of it as it came down through here, as they're starting to look more at sort of jobs not being so much of an issue. But of course, it's still like a whisker from the very highs. So it's not to sort of say this thing is breaking, rolling over by any means. But we've got a little level down under here where we could say, hey, it's going to cool a little bit more. This is the big breakout we had from like was it end of August, start of September, the massive breakout. This breakout here as well, this move, just to put it in context, is actually as big as that big one we had in dollar terms back in, was it April? Yeah, in April. That was that big monster move. We'd never seen anything like $540 in 3 weeks. This move here, I guess you could take it from those lows over there, but realistically pull back a bit here. So I'll use it from this one here. This one's gone 400. Well, I don't know where we go to about in the 90s around here. $475, 18%, 14%. So yeah, these moves are just astronomical. Like, we've never seen gold move like this ever. I mean, look at our gold moves previously. Choppy, 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 choppy. I mean, look, if you stand back, it's just in an incredible, incredible bull market, and that's the thing. That's why we can sort of say that, look, even if it pulls back a couple of bucks, it's not like, hey, game over. But the thing is, there will be a point where this thing starts to cool off. It obviously has cooled a little bit from the highs over here, but if we look at this last push, where are we at here? It's only at the third tested underneath the 38%, and 38% is obviously a strong sort of continuation number there as well. So look, if this can hold, the sellers, if can hold it underneath, say, probably around 60 or so, where we are 52 now, so it's pushing up early in Asia here. If they can hold it underneath 60, and this can consolidate, and then you get some stronger inflation data, that could be what we use to sort of see this to sort of cool off here a little bit more. And we have sort of seen this trend test and hold a few times. So you probably could see some sort of bias here. Comes in about sort of confluence of these previous highs. This is the level here to sort of see a little bit of a deeper correction. You know what I mean? It's not necessarily going to bang come down over here, but then you can start to go, okay, maybe this would be where buyers would like to give it another go. But if it breaks the trend, generally you can, despite a little bit of chopping back and forth, you can generally expect things to sort of cool off a little bit more through that move there. And then we can sort of, at that point, go, look, here's our low, here's our high. This is getting a little bit ahead of ourselves just at this point, but it doesn't really matter. This calls up. Then we can start to go, okay, where's it going to pull back to? Because that's the breakout move that we can see there. So you can start to go, where do these things kind of line up? Combination of, Fibonacci's and all this. And a reasonable level, yeah, look, I mean, deep pullbacks with gold and reasonable is not really the sort of, they're not two words that kind of go together. But if we were to break this trend, if we were to sort of come down, test, probably 3640. 3640 is where I'd probably expect it to go. If should it break the trend, buyers to come in. yada yada, back and forth through here. That's fine, whatever. This kind of area here, lining up with previous all-time highs from April, those sort of previous all-time highs from April, 61% move of the breakout move. I would say that's an area that the market would like to sort of really give it another solid go, because then you're about almost $300 off the highs. This is obviously, I mean, this thing could just go whoop and shoot up here and 38, 3900 next week, whatever. But the point is, it's sort of like, you sort of think, where could it potentially go? I would say 3500 would be a reasonable area where the market would be saying, hey, let's get on, let's buy this thing back up over here. So I'll put a little mark over here. And the zone over here. Check something out very quickly. Yeah. Again, look, this is very much forward thinking. But in the event that we break through 37, I would be targeting 3640. You could potentially see some sort of head and shoulders forming here. And again, this is very ahead of what's happening here. But this being a little bit of a shoulder, a little bit of a head, and a move over there. And that measured move from the size of this thing here would line up around this previous highs here as well. Again, this is just forward thinking with it all, but should we see a little bit of a combination of this moves here, so you'd need a push to 3640, you'd need a sort of drive back up to 37, sellers to come back in and then break 3640, so second effort underneath 3640, that could give you a break of trend, head and shoulders, and obviously sort of the measured move sort of coming back down over there, but 35 would be the target there. Again, in saying that, it's still sort of dribbling up near the ties, but should we start to see US dollar carry on and run for a little bit, that's the plan of attack for gold short side. Okay, and Aussie done with copper. Copper sprung back to life. Look at this. Wow. I say sprung back to life and that, but yeah, it's back at the 38%. And how did we go with this level here? Pretty much, those things are pretty much on the money. So this little middle level here, obviously, it's sort of respecting it a little bit more on the backside here. But this is a good example of sort of a couple of things to take away here. This is where we thought the buyers would be. As soon as it kissed it, bang, it sold down. Thought the buyers would be here, but we had data that sort of, well, data, those headlines of that, pushed it through, ignored this level. But as you can see, as it's coming back into it, the market is respecting it. So it goes with the very early point that I made, sort of like where, headlines and data can disregard the technical analysis of it all. So it just chopped straight through there, but came back up into this zone. We're talking within a couple of, half a cent, or this is not even a cent, a couple of points, whatever, and bang, market moved back into it. Because there would be people that were trying to buy this thing on the pullback, and this sort of chop through here absolutely sliced them up. Now they've got a chance to get out, plus also this was a nice big decent move up like this, bang, they're out straight away, or that's their target, that's fine, and they move on from there. So look, it's surprised me. I thought it would have come back down here over here first, but we have seen this thing sort of shoot back up. Right now, it probably look, the fact that it's actually sprung board up like this actually goes, okay, great, maybe we can trade it a bit. I'm not looking for trades on this here, but I would like to sort of see what happens if it does hold this zone here. If we see a continuation push back down, then obviously back into the box is not going to look pretty for this sort of move up the top side over here. But the fact that they sort of stepped in and sold it right, pretty much on the money of where we had that zone marked out from God knows when, back in June, goes to plan with that idea that this is where they're sort of selling it down. 38% is obviously a continuation move, and I still think we have a move down over here, but I'm not going to trade this. So I'm just going to watch how we go. And finally, the yuan is bang breaking out, and this is the thing that I've sort of been touting for a while, like a lot of these sort of trades. Timing is something that I need to kind of work on and not jump the gun with, because sometimes you've got the plan, but obviously if it doesn't if it takes an extra month or two to get there, well, that's a lost opportunity and could be quite dangerous, of course. But the point is, we're through this falling resistance. This was the point that I was sort of saying, hey, look, from back up here, April highs coming down, this was the first sort of level to get through. We saw the breakthrough, we saw the retest perfectly in line, bang, up into this zone here. Again, these are the levels that I'm talking in terms of price. Obviously, timing is not the key here. Well, I mean, sorry, timing is the key. Timing is not the strong suit. But the point is, okay, it hit this level. So it hit its target. Hit it at the same time that US dollar, DXY, hit its target. At the same time, we saw gold pull back a bit. At the same time, we saw Aussie pull back a little bit. You know, this is how the things are correlated. This is a level where we want to see a squeeze and a break higher, hence this big arrow moving up over here. It came right up into the zone and sellers stepped in, like we've seen them done time and time before. This is the same sort of thing here. If we see DXY cruise to another level higher, USD against the yuan is going to be exactly the same. We're going to see this thing blow up and move up to these other higher levels here as well. But we are seeing the break of a wedge off a weekly support. This is very important because this is a very high time frame area. Look at this move here. This is weekly. Look at the reactions that we've seen off this line. And this shows the importance of this. 723 is the big line to get above. If we see the market push above that, that's going to be sort of big, a very significant move with Aussie, potentially with gold as well. But at the moment, from a technical standpoint, oversold. Daily, big negative divergence. Negative divergences, you know, these are some of my favorite sort of setups for reversals. Through the falling resistance, up into that zone. We're at the point of the break level here. Overbought in the daily is probably not the best where you want to be necessarily here, so maybe some consolidation might be required. But if we look at this and sort of think 4 hours, pull back here a little bit, this is probably like things just because they're oversold doesn't mean they can't stay oversold for extended periods. I mean, overbought. Here's an oversold area and it dribbled along. It was oversold for, 18th through, oversold for like a week down here. This is on the 4 hour as well, of course. But as you can see, sort of like, it has been sort of like periods of being overbought, sorry, and it still continues to move up. Even as it's kind of moving down, it's still moving up there. But the point is, this is a weekly confluence. You've got a daily negative divergence. We've seen the market react. It's come through its trend line. It's primed for a squeeze to move higher. And this is very much going to sort of impact the Aussie if this thing breaks a bit higher here. So it's certainly one that I'm keeping a close eye on. All right, so in saying that, data. So for the rest of the session, as I said, pretty much through this whole thing, PCE, core PCE is the one that we're kind of looking at, and we will see how that works out. So again, look, the market's actually just having a look at this now, is expecting a slight little sort of tick down. How's this go compared to what we have sort of seen for a bit here? No, it's moved up. Oh, core PCE, here we go. 200. So pretty much, yeah, as you can see, sort of, that's pretty much the band. So 03, 02. So market's pricing for 02. 03 comes in. We're going to see US dollar run. 02 could possibly, it's a bit more of a question mark, but it's a bit more of a question mark. 01, we see a sort of pullback. That's the outlook for US dollar coming into the end of the week. Consumer sentiment as well. Inflation expectations, what have they been previously? Inflation expectations seem to be sort of moving down. Of course, you don't get the expected number for this one here. No, but actually, no, we've ticked up. So it went down to, in August, start of August, we came down to 4.4, 4.5, moving up 4.8 previously. So again, that trend has turned around. The inflation expectations are sort of starting to tick up a little bit higher. While consumer confidence is high, we've got local data is strong. US local data here. If PCE comes in hot, I think we're definitely going to see a push on US dollar. That's it from me.